All right. All right. All right. Let's see if this is good enough distance. I think the focus is just slightly off. There we go. All right. Yo. What's up, people? How we all doing? Let's see here. All right, we'll throw that up there. We'll throw that here. We'll throw this up in the top corner or something. Boom. And then we'll throw this here. And we have our setup all good now. Okay. Cool. Hello, how are we doing? Hope you guys are doing well. What's up, Ao? How you doing, man? Let me 1 second, guys. Let me get this done. Okay. What's up, Tim? How are you, man? All right, guys. Hope we're all doing well. Thank you so much for joining me tonight. We are gonna start in just a few minutes. Let me get my dinner's in the oven. I'm cooking salmon, and then let me send a tweet out real quick. Take a picture of you goblins. I think that's perfect. I think that's a perfect face. No, I'm kidding. That's horrible. I'm actually not gonna tweet. Should I tweet it out? What do you guys think? You think tonight should be a little bit of a sleeper? Yeah, tonight should be a sleeper. Excuse me. Okay, well, we have lots to talk about today. Let me just, yeah, you know what? I'll tweet it out. Why not? Socials or whatever. Scan, What's up, everyone? Sorry, I'm sending this out. Okay. Cool. Hope you guys are doing well. Can I play? Is it possible to play copyrighted music? Or non-copyrighted music? Let's see. There we go. Okay. Okay, classic. Okay. All right, everyone. Everyone's trickling in. Let me go get my salmon real quick, and then we'll start when I get back. What's up, Alvarez? How are you, man? Rader. We're getting fucking impatient, Rader. Shut up. Anything by the Fat Rat? What? This is like brain rot. What am I reading? Yo, sup? Greatly appreciate what you do for the community. Hey, I appreciate, man. You know, I try pretty hard to get back to those that were either misled in some way, but mainly just people who love it. You know, I truly do think that I was given a gift in meeting my mentors and in trading and my personal skill set and gifts. So I want to share some of that and hopefully spark a little passion and growth in as many people's lives as I can. But yeah, so hope you guys are doing well. Today we actually have a really cool plan. So thank you for joining me tonight. We are going to be talking about my charting process, but we're also going to chart every major index. So I've already charted SPY right here. This is my SPY chart for the rest of the week. Super easy, super simple. And I'll kind of talk to you guys about the different levels I draw, the different processes you can go through, and things like that. So anyway, tonight we are having salmon, some nuts, and pears. This is probably the healthiest meal I've ever eaten. Okay, this is by far, this has to be the healthiest meal I've ever eaten. You guys should know me. I'm not the most superior healthy eater ever, so I rely heavily on my metabolism. Let's just say that. Bueno. Data-driven trading is the way. Yeah, man. You know, I think investing and trading, it's very complex. Don't let anyone tell you it's easy. It's not. The way these people paint it online is so cringe. You have to be very intelligent. You have to be very smart and very calculated. But it's not as quantitatively crazy as most people say. Like, it doesn't require, you know, a massive $3 billion algorithm to beat the markets. So that's that. All right, let me get a napkin and then we'll start, guys. I promise, okay? All right. Oh my God, I forgot a napkin. Rader, start the fucking stream already. Shut up. All right, we're gonna start now. I bought one contract on Tesla for October 10th announcement. Interesting. Okay. Rader, your buys for SPY this week, bullish? For the most part. We'll see, though. Again, you don't want to... It's going to be... We'll talk about that later. I'll save that for later. But welcome, everyone. Hope you guys are all doing well. Today, for those that are watching after the stream or during the stream, today we're going to be talking a lot about charting. Specifically, we're going to talk about my charting process, how I chart. But most importantly, show you examples. I'm actually... the reason I started this stream was because myself, I had to do some work and chart all the major indices. Sorry if the music is too loud. I've charted SPY right now, but I do want to go through all the rest of the indices, including anything in the Spider ETF, so XLK, XLY, XLC, yada, yada, yada. We're going to go through each one of those, practice, get the system down. And if you guys haven't seen my charting system already, you should have already watched it, but we'll go through it again to kind of give you that. So specifically tonight is really about not liquidity zones, not how to draw the zones, necessarily all of them, but that takes a little more training, but it's specifically going to be about the process, seeing each step, how I kind of approach it when it specifically comes to the indices versus individual stocks. So that's what you guys are going to see, okay? To say the least, I knew the SPY was going to tank to 570. There was a 15 minute premium of 570. Okay, so in classic tradition, before we start every stream, we always ask some sort of question. Okay, this is called the icebreaker question. So today, I got very sweaty, and it reminded me of a lot of the times during my last few years. I've been getting more and more involved in athletics. I've always been super athletic, but kind of when I got out of high school, I kind of took a little bit of a slouch. And then I've really been on the rise. So for anyone in chat, what is your favorite sport that you play or that you watch? Why do you like it? Okay. Type it in chat. Me personally, my favorite sport is soccer. I go to a bunch of soccer games, locally MLS in America here, but also I've been overseas to watch some of the Premier League. But I like all sports. I think all sports are cool, maybe except for breakdancing, which the Olympic Committee seemed to have approved. So we'll go past that. Anyone here a soccer? See, man, we got like a whole soccer fan group in here. Hard Cut Golf says, quote, "Bro, I'm kind of worried you aren't eating Cheerios for dinner like the usual." Okay. So I was just talking about that. The dieting slander needs to be banned. Mods, let's get a 12-week ban on him, please. Football. Listen, I have a lot of American audience. Ronald, if I call it soccer or if I call it football, no one's going to know what I'm talking about. Chelsea fan? Okay, so we've been depressed, what, the last 2 years? Let me know your mental health, Ricardo. Let me know. Do you follow the MLS? A little bit, yeah. I go to a lot of the Cincinnati games. Cincinnati FC. FC Cincinnati. Miami Dolphins. All right, so you can cut it off there. Go Dodgers. All right, so that's enough sports talk. You guys are too much into sports gambling instead of the real gambling, which is the stock market. But with that being said, slap fight. Okay, LFG, we're in the right ballpark now. All right, with that being said, hopefully you guys are having a great night. Today we're going to start talking about the charting process, how we kind of get into it, where do I kind of approach charting the indices each week. It's super, super, super important that you guys know how to draw a chart for SPY, some sort of map. Now, if you guys, just to kind of start off with, if you guys ever want to compare your chart to mine, you can sign up for absolutely free on the Rader Report and then compare your SPY chart to mine. Okay, and I give a little free analysis every week on the SPY, and I update this every day or every other day. So this is this right here, okay? So you can always look at this. Now, we're going to do the other charts tonight. I actually wanted to save it for some sort of live stream so I could show you guys. But this right here is something that you can use as a benchmark to compare your charting to, compare your analysis to, maybe even just your levels of that nature. With that being said, if you guys do kind of go through the stream and you're a little confused, like, hey, what's the where do I find this? How do I get more information? I would highly recommend you start going through the Markets Mechanic playlist. Specifically, number 1 and number 2 are the videos about charting, okay? Number 1 and number 2, you will learn more about the liquidity zones, how to draw them, what they mean in number 1 and number 2, okay? So that's kind of the more technical side. Again, we're not going over that tonight. We're going specifically over the process of charting, okay? All right, with that being said, we have some discussion to do. So, first of all, we have to talk about how do you chart SPY. Now, SPY is interesting. It is, of course, one of the biggest hedging instruments in the market when it comes to indices. So, with that being said, there's going to be a lot of stuff and a lot of information that you need to consider when charting SPY. When it comes to charting, you have to understand this. The purpose of charting first is super, super important. You guys have to understand why you're charting. Charting, and let me write this down so you get this, okay? A trade idea can't come from charting, okay? So what I mean by this is we actually talked about this the other day if you were here in the stream. You cannot and should not have a trade idea come from purely just a chart. You can't start on the chart. What I mean by that is this, okay? And I say this example all the time, and hopefully some of you guys kind of open your mind to this, but there are thousands of head and shoulders in the market at any given instant, across different time frames, across different sectors, across different stocks, across different industries. But only a fraction of those work out. Now, head and shoulders are dog shit. We're not going to talk about that. A fraction of those work out, okay? So how do we know which one is going to work out? Is it the one with the one that didn't make the low? Is it the one that actually went to the neckline? Is it the one that's at all-time high? Is it the one that kind of didn't reach the high but is now low? How do you determine that? There's too many variables in a chart to reliably spawn a trade idea just from the chart alone. Okay? We've talked about this in the past. Well, how do you get to a chart? You need to have an underlying idea that validates price action, right? So let me give you another example. Let's say a bunch of people are on the race getting ready to, they're lined up to race, okay? You have a bunch of athletes, a bunch of specimens, okay? Let's say you were like, okay, I need to determine, right? What chart traders do is they just try to look at them and judge who is the fastest. Who's the one that's going to win the race? Just by looking at them. We know the age-old saying, right? Can't judge a book by its cover. So you need to have, right? So who's going to be the better picker? Who's going to be the better sports picker? The guy who went to the training camps of the different athletes, the guy who has seen the times that they've been putting in practice, the experience, right? If you were inexperienced, never looked at the run game, and you lined up on a line and you glazed past Usain Bolt, you know, sorry, bud, you lost your money, right? But it's the fact that, oh, Usain Bolt, yeah, I've been to his training, he's super fast, he blah, blah. So you get the point. I'm kind of yapping at this point. But the thing about charting is you guys cannot start on a chart first. When you go, okay, I want to find a trade idea now, and you'll see this, you know, across different live streams. Even maybe tonight if we get time, we'll scan the flow, we'll look at the rotations, we'll look at seasonals, talk about that. So a lot of the trade ideas come from context. I can give you just one example. I'm currently long one stock right now, which is CVX. And CVX, I chose to long because of a few different reasons. From a context standpoint, the Fed cutting rates, the commodities are coming back into view. You know, you have energy, you have commodities, agriculture, you have even, you know, the material names starting to spike again, gathering a lot of strength. Energy was a beaten down name before quad witching, so if there's going to be a new empire, a new regime, it's likely to be something that hasn't already ruled. So energy makes perfect sense. It's also very strong. We liquidated in the last week, and you know, there's some open interest walls with that support a bullish idea to $90 by 1018. So there's a lot of different things outside of a chart. Now notice, I haven't really even mentioned what levels. I haven't mentioned, you know, anything like that. I'm just mentioning seasonally. I'm just mentioning, you know, as we start to get in this environment, what's, you know. So you have to have an idea before you get to a chart. And I can't say that enough, guys. Maybe I'm not doing the best job I've ever done of explaining it tonight, but you need to understand that. Before we even proceed, you need to understand why we chart. The purpose of charting is to map out risk. It is simply to map it out. Map out our idea. That's all it is. It's not to, Rader, supply and demand. And okay, supply zones break and demand zones break. How do you know which is which? How do you know which zone's going to break? How do you know which zone's not going to break, right? So you get down this infinite rabbit hole of logical fallacies that don't support quality high edge trades if you just trade from a chart alone. All right? So that's that. Anyway, you have to have a lot of context with this stuff. So with that being said, the purpose of charting, of course, is to map out risk. It's just simply creating a game plan, guiding our thoughts. And, a lot of people don't believe in technical analysis. It's absolutely something that's valid. The options market supports the idea of technical analysis. And we believe that candles, the Japanese candles, I believe these are called, are the best representation of price action. Okay. So these are the best traditional candles, are the best representation of a market. Okay. So everyone type yes if you understand. Type yes if you understand what is the purpose of charting. Type yes if you guys understand so I can keep going. Or if you have any questions. Pete Rose died? Damn. No. Okay, we're going to ban blast trades from the chat. Okay. I don't even know what I'm eating. What is this called? It's salmon and like couscous. I don't even know what this is called. It's good though. All right. So next up. That is the purpose of charting. Now specifically, how do we get into charting? What is the process of charting? What do we do to first start a chart? Well, when you pull up something like QQQ, for example, this was a previous week's chart. I'm kind of the goat at charting, but I digress. This was last week's chart, by the way. Okay, forget about it. We're going to start fresh. Okay, when you first approach a chart, this is QQQ. The first step, and this is only applying to the indices. Okay, well, you can't do it on the regular stocks. You want to do it on the indices. Now, let me ask you guys a question, and this is really going to help to understand our first step. Right now, I want you guys, and this is a thought experiment, right now in chat, again, it's free to participate. If you get it wrong, that's better learning experience. Right now, why do you guys think, do you think it is time efficient to start drawing support zones down here if I want to take a trade idea for this week? And if you say yes, support it. But if you say no, also explain why would I not want it? Why am I not charting all the way down here? Why am I not every week going down to these big old levels down here and charting? Why wouldn't I do that? Drop what you think down below. Why don't we chart levels from 1920? Why don't we chart levels from 2018? Why don't we chart levels from 2020 on QQQ? This is the daily. He said JK. Timing and context. Okay, so Kuwani being the Hawaiian superstar, he got it right. So what Kuwani said, I want you guys all read it in chat. He said, well, it's outside of the expected range. You are wasting your time if you're charting something that isn't within expected ranges. Because understand this, a market maker is not going to do anything or care about anything. A market isn't going to touch this level for a very long time. So therefore, why are we charting it? You need to know what is within expectations. if you're within expectations, you generally are very accurate because expectations based off of normal distribution have a 70% accuracy. Now you just be like, Rader, you're the professional yapper here. What do you mean by that? Okay. I'll show you. Now, let's see. Type in chat again. Blast Trades asks a good question. How do you determine expected ranges? There are so many ways. Drop in chat one way that you think that we could calculate an expected range or find one. What do you guys think? Let's see what you say. And again, I'm doing this to you guys not because I'm a dick, but because I generally want you to find out how to do this stuff, okay? Because if I give you everything, you're not going to remember it. What about SMCI to 0, man? Also, by me tactically stalling, I get a chance to eat while you guys type, so thank you. TOS, perfect. So you guys are getting it. There are multiple ways to calculate expected ranges in the market. So let me get you guys a few first. Okay. Now, first of all, if you guys don't know what I'm talking about, actually, I'll explain that second. That's going to be my second thing I do. Okay. There's multiple ways that you guys can go about calculating expected ranges. Okay. Number one, is this image too big? What's going on here? Copy image. Oh no, open in browser. Visit. Okay, here you go. So there's multiple ways to calculate expected ranges. My favorite is if you guys have Thinkorswim, you go to the options chain where you go and buy an option as normal, and the expected range for that expiration is this number to the right, plus or minus. So what you would do is you would subtract. So for example, okay, what is the expected range for February 1st? This was last February, so it's not going to be next February. Okay, for February 1st, which is in a couple of days, 5 days or whatever, it's going to be $6.2. So what I take from current price, I take $6.2 up and $6.2 down, and that's my expected range. Okay? Now, what determines this level? Why is this a thing? The options market is the most powerful market in the world, and it actually determines these prices. Why would that make sense? Well, the options market we get into this all the time, but the options market is actually controlling the equity market to some level. Very heavily influences the equity market. What I mean by that is, even though options are a derivative, which means they come from an underlying, come from the shares, the equity, and are supposed to be relying on it, in today's world, because it's implied action, because it has so much influence, you actually get the market makers balancing the equity around the options. Okay, so that's where this kind of thinking it comes into play. The markets set expectations, and they do so in the options market. All right. Now there are other ways to set expectations with parallel channels. We call these third deviations. Deviations you can do technically as well, but the most accurate is definitely from the options market. Okay. So that's that. Now, Austin, you're jumping ahead of me right here. We're gonna get to that in a second. Now, so hopefully type now the other reason that I want to explain how you can do this is what you can do is take the at the money. So what you do is you take the at the money, total it, and then that's going to be, or excuse me, yeah, you total it, and that's going to be it as well. Okay. So you can take the total of the at the money straddle, so the 46 call and the 46 put, and then you would total them together, and that's your expected range. So you guys can see that for January 29th, 186 plus 58.9 is about 248. This is also the case roughly for the 29th expiration around 237. So while it's slightly off, it's just a rough estimation ballpark throw. I like to use Thinkorswim. I think it's the most accurate. Okay. Other ways you can do this, you can just look up SPY expected range options AI. Now, they don't have this for every stock, and they certainly don't give it to you for free. But this right here is one way as well. You can see the expected ranges for a given expiration here. Okay. So this will tell you the ballpark expiration or upside and downside. All right. So hopefully you guys understand that. Now, again, this zone has a 70% probability of working. So if we go and we look at TOS right now, and we go to QQQ, and we say we want for the October 4th expiration. So what you would do is you would go on TOS, and you would go to the October 4th expiration. They say 8.82 to the upside. Okay, now I'm just going to cheat and show you guys the, so we'll do that. So they say 8.82. So when I do current price, 488.07, what I can do is 488.07 plus 8.82. Boom. That gives me 496.89. So 496.89. Right here. Actually, we're just going to go based off my old list here. I'm going to cheat. I already have a list. Hold on, guys. Sorry, I'm getting like spammed. Second. Okay. I'm going to cheat off this list. This is a list. Here you go. So we're going to cheat off this for the sake of time. So they say 497.32, 43. You can always just round up. 3 decimals isn't realistic, so 33. Perfect. And then we're gonna do this gray. Sorry, it will go quicker. I'm just trying to do it slow for you guys. Now, of course, I chart on the daily, so that's what we're gonna stick with. So 497.33, and then to the downside, the expected range is 476.173. Okay, so right there, this is the expected range. Okay, type yes if you guys understand how to get this level. Now again, if someone asks you, Rader, what is the meaning of this? Why is this important? The expected range mathematically has nearly a 70% chance to close between those two lines by the expiration you looked at. It's not saying they're thinking it's going to go to that level necessarily. What it means is it's likely to be within that expected range. Okay? Now, most of the time, it does like to gravitate towards that area, but the main idea is that it's likely to stay between, not necessarily, oh, it's going to go to 476. All right? Does everyone understand that? Type yes in chat if you guys understand that. This is vital information for you guys. If you miss it, it's gone. Rader, you're incredibly handsome. Rader, can you dunk on me? Rader. Okay, I'm reading ghost comments. My bad. Fake comments? You bought puts at close. Well, we'll see. All right, everyone type yes. I only have 2 confirmations. Are you telling me out of the 40 people in here, only 2 of you decided it was a good idea to make sense of all this? All right. I know you guys are busy. I'm trolling. So, with that being said, this works for 0 DTE. Yes, but, big but, I wouldn't advise using 0 DTE expected ranges. The reason being, is because 0 DTE especially on something like SPY is kind of rough. It becomes more predictable on a longer time frame is what I'm saying. Because what happens is market makers position for the Friday's expiration or the monthly expiration or the end of the week expiration. They don't position for a Wednesday expiration. Like it's not, you're going to get a huge balancing move on Wednesday for Wednesday's expiration. So I wouldn't do 0 DTEs. I typically do for expected ranges. I always chart on Sundays or Saturdays or the weekend, past Friday close, and I would do it for the next Friday. For the monthly report, which I'm going to make and release likely tomorrow, you'll see me do for 10/18 expiration. Okay. So I never do 0 DTEs, especially since most stocks don't even have them day to day. That is kind of pointless. Okay, so now that you guys understand that, that is the expected range. And again, the mathematical model behind that is normal distribution. I butchered that. Oh my, what did I, the monstrosity. What did I just type there? Let me show you guys. So what's this based off of is this right here. So in case you guys didn't or did pay attention in math class, this is normal distribution. And what this is saying is 34%. One standard deviation from the right and to the left gives you around 70% accuracy. So this is what this model is based off of, by the way. This is why it works. Okay? And again, this standard deviation model, have you guys ever seen the balls that fall from the kind of things at the Science Museum and they always form this bell curve shape? That's exactly what it is. Okay? All right. Hopefully that makes sense. Okay, next. So, you guys want to know the beautiful thing? Is when you're charting, again, I chart on the 1 hour, the expected range will always be a liquidity level on the top and bottom. Always. It's a freebie. You don't even have to chart. It's just free. Why is that? Well, the options market, like I said, is a very intelligent market. And it's going to place its expectations on incredibly intelligent levels, which are always going to be liquidity levels. Okay? That's why it's the expected range. So you can always draw a support zone on the bottom one and a resistance zone on the top one. That's 2 free zones. Okay? Just from the expected range. And it's no coincidence. What you'll actually see is, for example, they placed the expected range right here. Well, this right here was a shot gap. So no wonder they placed it right around this area. Because what happened here was you had a huge gap down and flush. All the limit orders stay right here. So the options market knows that this right here is a liquidity level. You don't even have to work for it. I don't understand why people don't chart this more, but this is something that you can do. Okay, it's a mechanical process in the market. All right, so that's that. So after that, what we can do now is pretty simple. And again, this is only charting for the indices. For individual stocks, it gets a little hairy, gets a little complicated, but with indices, it's relatively straightforward. So, and if you guys don't believe me with the whole liquidity level thing, if we go to the SPY chart, they place the expected range right here, which is at 561. This was also a shot gap where you had a huge gap up after hours. All the limit orders sat right here. They didn't get filled because we gapped up the next day, and that's why they're sitting right there still. Okay? So it literally gives you a free liquidity level every time. If we go and we look at the energy chart, you can see that this actually broke out of it. And then look at this. Come Friday, you actually came back and closed above into the expected range. Again, 70% accuracy. Those who were shorting down here, now, not to say that this was any good trade to long, it wasn't. But this right here is just another example. Again, staying on the right side of the odds. Another example, XLK. Look at this. You come into Thursday, you go above the expected range, and you still find a way to close under it. Okay? So this is why it's so important to have, because if you're staying within expectations, you're going to have a good idea of where to trade and where to focus your energy on. Again, guys, if you're going and charting on the daily time frame and you're charting like these little, you should see the bears. First of all, I want to say something. Bears on X, they haven't invested or made money in the markets at all in their life. That's why they're bearish on the market. They want the economy to collapse for their $200 puts to go to $1,000. Congrats, man. Anyway, with these levels, it's super important because if you guys are focusing on these outrageously wide ranges and you're, oh, Tesla could go to 400, no, right? You need to stay within expectations and understand that, do expectations get broken? Yes, absolutely. But there's ways to position in for an expectation range, yada, 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 to break. But again, it's not the chart's job to determine if a trade is good. What really makes a trade good is that the idea behind it makes sense, and then the chart is then validated. And then we can look at the chart and see if that idea, that quality idea, actually matches the chart and if there's opportunity. You do not want to look at a chart and go, oh, look, head and shoulders. So there could be a hedge order on it to the upside, call. So mechanically speaking, market makers are likely going to start selling shares if it goes in the money, and you're going to actually get quite a big reversal to the downside. But you didn't know that because, number one, you just looked at the chart. And number two, you weren't in expectations. You had no idea of how far it could go, right? If the expected range is likely to be an area where markets start to stop, or that, you know, without serious momentum, they're not likely to break or that, wouldn't it make sense that as a trader, if you short the market and it goes down below the expected range by Thursday, that, well, by golly, I should probably sell at least most of my position, because if I charted this based off the Friday expiration, the risk is extremely high that it could go back into that expected range. I've already exceeded the expected range. So sure, I could hold some. I probably should because we beat expectations. But it is a huge risk parameter to know where the expectations were broken, because that allows you to know where you can take off size, right? Where you can manage your positions. Hopefully this makes sense, okay? Anyway, so back to the QQQ trade, rambling over. You guys know I love to talk and whip up a storm. So as far as QQQ here, you always have these two zones here. Now, next what I like to do is I like to go and I look at the option walls. Now, many of you don't know, but again, you can use the open interest tool. I've made a few videos on this in the past. If you guys are a pro member, just go to the video section. There's a whole tutorial right here. But these are all in-house tools that I've built for my platform on the Rader Report. And this right here is the OI chart. So this is going to show you the open interest for certain stocks for certain expirations. And when we go and we look at the open interest walls, we have to remember that open interest walls are always going to be a liquidity level. Always. Guaranteed. Now, does that liquidity level break? Yada, yada, yada. It doesn't matter. That's not up to the chart to tell us. Again, that's the idea behind it, you know, trying to see a breakout, something like that. So open interest is always going to be a support level or resistance level. Now, which is which? Put walls or large areas of puts tend to be support levels. Calls tend to be resistance levels. There is a difference in that, yada, yada, yada. Now, I want to test your guys' knowledge as well. When we're looking at this chart, let's see how smart you guys are. Do we have a call imbalance or a put imbalance for this week? Let's see what you guys say. Do we have a major call imbalance or put imbalance? Do you need more than just expected ranges like seasonals? I'm confused what you mean by that. More what? More, why would I need more for anything? We're just talking about expected ranges. All right, listen, I'm gonna be honest, guys. Get scammed, okay? When you're looking at this for this week, although there's more puts, they're all outside of the expected range. So, if we zoom into the expected range, which for QQQ is right here. Okay, a little bit of a different chart, but it's the same shit. For SPY's okay, fine, we'll do SPY just so you guys don't get confused. SPY's expected range is only down to 561. So if you go back to SPY's chart, 561. Okay. Boom. There is not a single big put wall in the money. Okay. It's not within expected range. So we actually do not have a huge put imbalance for this week. Now, what happens when all these start to become in the expected range? What happens when the market does start to drop? Well, then you're going to start to feel the wrath of put walls. You're going to start to feel that buying pressure. Okay. And the best example I can give of this is into 920. You guys knew I was talking about this a ton on Trader TV and things like that. But what I talked about a lot was that 920, there was a huge put wall at 520. And if we ever got down to 520, we would likely bottom. It's at 510 now. But 520 was like the massive put wall for the markets. Let me see if I can get you guys a picture of that. So it would have been on the September chart, most likely August, September. Oh no, yeah. I don't know if I showed it on here. Okay, I'm not even gonna try to find it. But what it showed is what it showed was 520 was basically the bottom. It wasn't until we got to that level that you actually started to see that put imbalance starting to weigh on the market. So I did scam you guys. When you want to, and this was going to be my segue into my next comment, when you want to find call and put walls, they have to be within the expected range. Do not consider walls that are outside of the expected range. Why? Well, again, if we're looking at the expected range for this week, why the hell are we considering a possible imbalance if someone has puts for 400? That's 72 points away. Why are we worrying about that? We shouldn't be, because that's a market maker isn't going to hedge $400 puts. They're not going to take action off of them. Okay, they're not going to be like, oh, someone opened the $400 puts today, I better go and balance that out right now. Sure, is there some micro movement? Yeah, whatever. But it's not like a huge worry for the market maker to, oh, I got to close under him now. I got to close above him. It's outside of expectations. Okay? So why would the market maker care? What is it? 80, 90% of out of the money options expire worthless. So why would a market maker start to sweat about a $400 put? They're not. Okay, so what you can do for specifically the indices after this. Now, let's just finish up the call wall. What I'll do is I'll go and I'll find the call wall. Now, I'm going to add a step in here that's kind of out of order, but, whatever. I should have talked about this to begin with, but it happens. Happens to the best of us, right? So, what you would do is you go to QQQ. And again, you do not want to do this for individual stocks like Tesla. You do not want to do this for NVIDIA because, well, we could get into that later. But you can see very call heavy here, but we're not worried about that. What are the major call walls for the week? It seems 500 what is the expected range? 497. So that's outside of expected range. It seems we kind of have a call wall at 495. So this seems to be kind of the bottom of the sloping. So I'll say 495. I'm not going to put all of these because why would I? It doesn't give me any more information. Just understanding that, okay, there's probably going to be some sort of resistance level at 495. So what we'll do here is we'll grab this, and this is just a custom tool I have where I can type in my call wall and it shows up. Okay, and you can see, relatively speaking, this is right where that resistance zone is. So I'm not going to draw a zone on it, but understand that it is a resistance level. Okay, so that's that. What was the call wall website? That's the Rader Report, man. That's my website. But as far as this, what we can do is go in between here and find just the liquidity zones. I'm just going to be real quick with this. So first of all, we have to understand one thing. This right here is a void of liquidity right here. So we can talk about that in a second. But as far as resistance levels, it seems this right here would be one right around 491. Boom, just above this high here. Again, you guys look at this and go, well, Rader, this is a resistance. No. It's actually slightly above because they defended it before they got touched. So that's the real zone right here. In fact, you could almost move this up, like right there. Boom. Okay, so this is another resistance level. Sometimes what I like to do is determine, do I drop it below or above? I'm going to drop it below the expected range just because it makes more sense. And then what I can do here is just draw another support zone. I don't need to clutter my chart with every zone, but you can notice here we had a big pump. Look at the change in behavior. So we had a sell-off, chop, 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 then a very clean pump. Someone injected liquidity here, so that means right here is where it started. Cool. So right there. That is our zones. Okay. So these are our liquidity zones. Now, I might go up and clean these up in a minute, whatever, change them around a little, but that's generally how you would outline it. Okay. All right. Now, the next level you can actually do is called the market maker hedge range. Now, what is the difference? I'll show you real quick. This right here is the expected range. This right here is the market maker hedge range. Now understand this. The markets have an expectation, but market makers are safe and they hedge beyond the expectation just in case. Okay. So this offers an additional level if expected ranges are broken that you can trade off of or expect some sort of action off of. Okay. The other intel it can give is whichever one it is closer to. Generally speaking, in this type of market environment, 99% of the time on the major indices, since we are in a bull market, you'll see that it's closer on top than bottom. But if the market maker hedge range is closer on top to the expected range, then the market maker hedge range on bottom is closer to the bottom expected range. You can see bigger gap here, smaller gap here. This can infer that there's going to be sharper reactions off of supply zones, while any dips will resolve in some sort of consolidation. So you're not going to expect that immediate buy up. This has remained true. Check this out. Any dip resolved into chop, but any pump resolves in a sharp reaction off of that supply. Okay? So it also can give you a market dynamic that you can expect. Now, is this something that I look at on a daily basis to see if it changes? No. Just understand the concept. That's all I have to give to you. Okay? So that's that. All right? Type yes if you guys understand. Type yes if you understand everything up to this point. Okay? And then I'm going to explain market maker hedge ranges. So give it a minute. I'm going to explain market maker hedge ranges. How to get them. Yes. Yes, yes. Sorry, I had to send a quick text. Repeat the whole bit about tight ranges in dynamics, please. Okay. So, to recap, market maker hedge ranges being closer to the expected range. Whichever side it's on, you can expect a sharper reaction in that direction. So, since we're bigger on bottom, you actually expect a, well, let me rephrase this. Whichever side it's closer to, expect a sharper reaction in that direction. So it's on top, so expect it down. Whichever one it's farther on, expect some sort of consolidation to end up from that. Now, this isn't a, I don't want this to dominate your thinking in a trade plan. This is something I don't think about. But you just have to know the concept, okay? You're not going to go, oh, whoa, look, Rader, it's closer, so we can expect sharper reactions than buys. Okay, but that shouldn't dominate your trade plan. Just know that that is the general concept, okay? So whichever one's on bottom, you can expect a consolidation of some sort. That any move in that direction would result in a consolidation. Okay. So with that being said, what we can do next is actually go and find the market maker hedge range. Now, what you want to do is if you're on Robinhood or anything like that, you want to go to, let's say, Robinhood. Boom. So go to Robinhood, something like this, okay? Go to Robinhood. Hold on, let me make my camera bigger. Okay. You're going to go to Robinhood. Okay, something like this, and you're going to select chance of profit. Now, if your broker doesn't have chance of profit, I believe it's out of the money probability. So, there's that, okay? So, I think TOS, it's out of the money probability. But you want to go to sell, press sell on Robinhood, and then go to like call, for example. You want to go to whichever one has a 90% chance of profit. Okay, now I'm going to get real close. We're going to get real close to the screen right now. Hold on. We're going to get real close. We're going to get real close. Oh. Okay, wait. Maybe I should silence my notifications in case you guys catch me lacking. Okay. Rader canceled. Imagine I get like a text like, yo, Rader, come to the Diddy party, bro. Okay, shut up. This right here is Robinhood, okay? So when you're on Robinhood, for those that have it, press sell. Again, this is out of the money probability on TOS, I believe. Then you go to all the way up to chance of profit. This one says 90.87%. What you do is there's always going to be one. They're never going to be exactly 90%. But you're going to select the one that is little over 90 and a little under 90. And then split the difference between the two. So 584 and 583, what's the difference? 5835. So this is, since it's a call, since you're selling your call level or out of the money of calls, this is the top one. Okay, so 5835. And then for puts, we would go down to 90%. You can see again, we have one that's 90.87 and 89. They're obviously not 90, so we split the difference. 559.95 or 559.5. Okay, so 559.5 and the other one. Okay. Okay, hopefully that makes sense. Does everyone understand? Type in chat if you understand. Type in chat if you would. Type in chat if you would let me be your designated driver to the Diddy party. You know how immature that is? That I'm a grown-ass man joking about Diddy parties? That's crazy. Welcome to the stream, everyone. All right, type yes in chat if you guys understand. Did you guys get that whole lecture? Are you guys alive? Puts on baby oil. So I just had a whole lecture about market maker hedge ranges. And Hard Cut Golf says, puts on baby oil. All right. So we're officially cooked. Buddha says, yeah, they're called freak offs. Okay, so this is why I just don't mention Diddy Party on my streams anymore. So we're definitely getting banned.
Huh? Oh, hell no, man. What the fuck?
Demonetize? I don't even think I'd monetize this stream. Okay. Type yes in chat if you guys understand. If you don't understand, type no so I can help you out. So we're currently at market maker hedge range. Can I explain it one more time? I sure can, Blast Face. This is why people leave my stream, dude. Okay, so to explain it one more time. This is, by the way, this is just an average Rader stream. This is just average, by the way. This is like one of the most normal Rader streams that we've had in a while. So to explain it one more time, okay, what is the market maker hedge range? The market maker hedge range is the level that is beyond the expected range. Remember, markets set expected ranges. Market makers are safe, so they hedge beyond the expected range, and that's this level. We select a 90% probability of out of the money, which again is on Robinhood chance of profit, and then also sell. And then that is our level. What is the purpose of a market maker hedge range? Two things. Number one, it offers a level beyond the expected range. It is a liquidity level, but also it can give us some insight. Again, no major consideration of this. We don't need to be thinking about it all the time. A lot of you guys like to think about these new concepts a lot when you don't need to. That when the market maker hedge range is closer, and maybe I should have done a better job of explaining this. If they're hedging closer to where the expectations are, wouldn't you agree that they're going to be a little more aggressive to get it back down? So whichever side is closer, hopefully that clicks some bells for a lot of you. Because it is closer than the one on bottom, they have to act with a little more urgency to get it back down. Hence why resistance zones we can expect a little bit sharper reactions off of. Right here, you can see since it's wider, they have a little more leeway, so they're going to let it chop and do its own thing on the drops. Okay, so you wouldn't expect a huge, you're not going to be expecting a massive flush through a support level or something, okay, or whatever. Now, again, I don't want you to think about that every time. Be like, look, it's bigger on bottom. That means we can't go down or blah, blah, blah. No. I don't want it to. It does not, on the scale of importance, it is towards the bottom, okay? All right. So that's that. Okay. So with that being said, what is the expected range and market maker hedge range for this week? Well, Rader has a cheat code, and he can just look. I believe we said it was 450, 559.60. Wait, that can't be right. Okay, I guess it's 559.60. God damn. What are they smoking? What are these guys smoking? Oh, wait, I'm on SPY. Well, it's like, wait, I was so lost. I was like, what? Okay. I was like, there's no way. Okay, but I mean, it's slightly higher, but whatever. We got to go based off. Oh, what am I doing? I'm so lost. See, this is how out of it I am. I released the Rader Report last night at like 3 a.m., so pardon my lack of sleep, but QQQ is up slightly up after hours, by the way, for those that have a trade on it. Okay, so for QQQ, the market maker hedge range is 4735. So 4735 right here. Boom. And again, I'm sorry that I'm drawing this out so long for you guys, but I really want you guys to understand this. Like, I'm tired of seeing these shit, like, dog water charting videos on YouTube. This is the last technical analysis you'll ever need. And it's like, how to draw a support zone. And then they don't get into any of the reason why anything works or what happens, or, you know, half these guys don't even know what options are, which is sad, but whatever. 4995. Again, I'm not hating on everyone. I'm just, I'm happy and blessed to have the knowledge that I do and to know the people that I do. So take your blessings, be happy with them, stay in your own lane, you know. All right, so right here, again, it's pretty even, so we're not going to draw any major conclusions from this. We're not going to go, oh, yes, Rader, it's bigger on bottom, so we need to consider it this way. No, they're relatively the same, so we do not care. Okay? But they do offer an additional support or resistance level, essentially, or even if the market maker hedge range gets exceeded in a week, oftentimes it goes into a huge frenzy. But it's a level that often acts as a dynamic liquidity level. Okay, now for the complicated shit, okay? And that is some conceptual discussion. The last part we have to talk about is liquidity, golden zones, as well as the last thing, which is kind of game planning, but also some other things. So first, to recap, how did we get to where we are today? Well, first of all, we drew the expected range. We drew our guaranteed level on each. They're always going to be a level. Sometimes you can put them on top. Sometimes you can do it on bottom. You'll have to kind of eyeball them to see which one makes more sense. In this case, the bottom one makes a little more sense, so I'm going to keep it symmetrical and go with the top. I'm just going to flip it. Additionally, you want to go find your call and put walls, but most importantly, your market maker hedge range right after the expected range. That's just, again, chance of profit, 90%, boom, boom, puts and calls, and that's it. All right? And then lastly, you want to do your different zones in between or whatever. It doesn't matter what order you guys go in, but just get it all down, okay? So now we need to talk about this, okay? Number one, we need to talk about the golden zone. Now, I'm not going to lie, okay? If you guys see a lot of my charts, I kind of look like a cheat code a little bit, all right? We can also talk about momentum zones, but I'm not going to show you how to draw those necessarily tonight. We can talk a little bit about them. Okay. Let's go to a good chart. Okay. So, I'm not going to lie to you guys. I'm a little bit of a cheat code when it comes to drawing zones, because golden zones are extremely tricky to understand. And I'm going to be honest, I'm not even the best teacher of them. It's just one thing I was taught, that you have to just know what to look for. You just have to have the experience, right? You walk into a burning building, you're a firefighter, you just know what to look for. You just know what the silhouettes of people look like in the smoke. You know where the general exits are. You know how the smoke feels. You know, you just got to know. Now, the golden zone is an area. Every single week, there is a pivot level in the markets. And this is the golden zone. This is the level that if you get above, or you gap above, or you gap under, or you have a directional move into or through or whatever, you can expect some sort of magnitude through it. You can expect some sort of move to follow. Okay? Why does a golden zone work? And I'm going to try to explain this in the best way possible. The golden zone can be a variety of different things. Most of the time it is technical. And it's the zone where you almost get to the point where there's guaranteed to be a reaction. Now, I've said this before in other streams. But what is the purpose of a golden zone? In trading, there is 3 directions. There's not 2. A lot of you guys forget that. It's not 50-50 odds with options. Because if it goes sideways, you lose money. Okay? So it's not 50-50. The odds are actually against you. What golden zones do is essentially identify the area where a chop is not possible. So what that does is gets us in a better position to say, okay, at this golden zone, this is where I want to be involved. Because if I'm at the area where it's nearly guaranteed to move, then I'm raising my odds. Whether I'm wrong or right, doesn't matter. If it goes against me, doesn't matter. But that one area was where I was going to be involved. Right? Alex says, oh, yeah, man, I appreciate it. Sorry, I just started reading now. You're welcome, bro. I'm glad you stuck around. Reed, I already did that just before the stream. Actually, that's what inspired me, because I was actually charting. That's why I actually hopped on the stream. So those will all be posted tonight before I go to bed. The spy is already up, though. But as far as no, you're good. Don't apologize. As far as this right here is the principle behind the golden zone. Now, I've tried to teach this to other people. A lot of the times it fails. But the golden zone, and you can go to all my trades, like for example, CVX, this is just where you were expected to pivot. This was actually from a previous liquidity zone. The sell-off actually came from this zone right here, and so this is why it's the pivot, because, well, they're either going to defend their sell-off positions or they're going to break and flip sides. So you can see that there is no option for chop here. You're not going to chop. The golden zone is to prevent from entering in trades like this, where you just get caught in this sideways price action. Almost all my golden zones on any trade I've ever done is an area where you can expect some sort of pivot. Okay, you can expect some sort of increase in velocity. Like here on Moderna, this was where a big zone was. Now, it's harder on individual stocks to identify that. SPY, it's relatively simple. Majority of the times, and this is the best way I found to teach it, if you pretend like you draw a box for the expected range, within this box you draw, split it up into thirds. Rough thirds here. Okay? Rough thirds. But generally speaking, if you're charting on the weekend, the golden zone will be somewhere around this middle box. It will be a little bit above, maybe right here, or somewhere diagonal, somewhere here. But it tends to be around the middle. Now, this goes back to a very market logic theory that, once you cross the midpoint, you're likely to continue to the end of the race. Like, you're likely to pivot. The midpoint is always somewhere where we expect to pivot. That's just how markets work, right? You get to, halfway through a price level, you've now taken up half, and that changes the sentiment and the behavior of a lot of things. So that's kind of that. And even an example I can give you is if we go and look at even the COVID crash. So if we go look at the COVID crash, I can show you guys this. You'll actually be amazed at this. But this is kind of a principle that goes around the market, that once you get to a midpoint, you kind of start to change behavior. So here was the drop of COVID. It was 36%. Okay. Now, if we take half of that, what is half of 36%? It's around 18%. Right here. Look what happened when you came back up to half. You went from straight buying to now chopping. You changed dynamics. This is where everyone was like, oh shit, right? They were like, oh shit, buy. So you can see even in the COVID crash here, the dynamic changes, right? This is where dynamics change, is around that half. Midpoints are always important pivot levels. So with that being said, whether it be a deviation, something like that. With that being said, golden zones tend to be in the middle here. There's a variety of different ways you can draw them. I drew it from this channel. These are the third deviations of this small channel here, and I made the top one the gold zone. Why did I make the top one the gold zone and not the bottom one? Given the momentum of the market currently and the expectations that we're at all-time highs, it makes sense that, well, the golden zone is at the bottom or at the top rather than the bottom. Because if I put it at the bottom, what I'm saying is, well, you have to go and touch it, right? That I'm anticipating a dip by opportunity. And this is also a point that I struggle to teach people, is that majority of the time, the golden zone, at least on market indices, is typically, especially since we're in a bull market, it's typically above price. Because this is where the markets either pivot higher or the bears continue to defend and you'll see a move off of. But again, the golden zone is very hard for me to teach, but you always need a golden zone because this marks the pivot level. Now, some of you, Buddha asked if this was because of gamma. It can be because I sometimes I switch it up. Sometimes I use the gamma flip. Sometimes I don't. Majority of the times I just use technicals. So if I were to look at QQQ and do this live, and we'll do one more example after this, but if I were to look at QQQ and do this live, I might have to manipulate this chart a little bit to understand it better. That, there might not be necessarily a golden zone in here, but what I can diagnose is that, well, we had this V-shaped reversal here. We had a gap up and a huge sell-off. So you know what? I'm going to make it like this, right? That, well, wait a second. Maybe I'm getting too ahead of you guys. Okay, let's slow down a bit. We're going to go, okay, where is there a golden zone here? Where would, if we came up to, the markets would be forced to make a decision of bearish or bullish, right? Where they would be forced to not chop the market, right? Where they would be forced to pivot and to make a big move in the markets. And based off of this chart, we have to do some storytelling. We have to look at the story and understand what's going on. Right here, we had a huge sell-off. You came up and you got clapped again. So someone defended here. Someone defended a position here, which means that if we came up to this general area again, the expectation would be, well, you're either going to defend your castle or you're going to give it up. Because if you don't defend your castle, we're going to take it no matter what. There's no chop, there's no negotiation, there's no diplomacy. You already defended it. If I come back to that area, the expectation is they're going to have to defend it again. If not, they're going to move it up higher at an increased velocity. You've won the castle. You've won the war. So that's kind of the way I try to teach it and try to explain my thoughts. Because again, I'm not the best teacher, guys. Maybe that's why I'm no media superstar by any means. But when we can kind of manipulate this zone, what I would rather make this chart is that, okay, we're driving up, but where's the golden zone? If we defended a position here, it's likely to be around there. We can maybe get real exact with like the minute chart. And I would say right around. So you defended here, you came up, boom, you dropped again. So this is where a lot of that selling pressure came in. So this would be my golden zone. So right here. Now, to complement this, right? Well, we defended here. This is the golden zone. But we also have a kind of V-shaped liquidity grab right here. So we would be forced to put a momentum zone right here. Because again, if you come up to this, you're likely to start to really rock it because everyone's going to cover from here. So I'm going to put a momentum zone here. Okay. So this is going to be my chart for the week. You have a golden zone here. This is the pivot. And just for simplicity's sake, we can do this. Now, if you guys are asking what is a momentum zone, typically, I will draw a momentum zone where a market is likely just to continue. Oftentimes, at all-time highs, you'll see me draw a momentum zone, or even XLE, for example, or not XLE, XLB. Whenever the golden zone is crossed, that's where you expect the pivot. But once you get into the momentum zone, you don't really want to take any entries or trades in period. Because the idea is that you entered before the momentum zone, and once it gets into that momentum zone, the volatility is going to get crazy, but ultimately you're going to go and break that expected range. This is kind of the squeeze zone, right? You don't want to be entering during a squeeze. You want to be in before, hence why that golden zone is before. But that's that. Okay. Same guy that said last week SPY will be down after option expiration after quadruple quadruple machine. Guys, do we think this guy is a member of the Rader Report? Hedge your bets right now. Hedge your bets. Aside from gap ups, gaps downs, crossing a golden zone, are you waiting for a certain amount of time to scale into a trade to avoid any quick pullbacks? So let me be clear. In times like this, especially, trading the indices is again, the chart is not to define a trade. The golden zone is only to outline risk. That if you gap into, typically you look for gaps. So hard cut, you're absolutely right. Typically you want to see gap up into, and this goes back to the liquidity laws that are in the Masterclass 1 video. But when you gap above a zone, it often carries a lot more weight to it because what happens is the markets will actually flip sides. They'll flip sentiment. They'll start to cover because none of their limits got filled. Versus if you break it intraday, you're oftentimes not going to get the same magnitude of move because you're still filling orders into the close. Even as it exceeds the price, they're still filling. So then next day you could gap down off of that. The selling pressure will still remain. So that's why you kind of need that. But you definitely need to go back to school and stop talking nonsense, bro. Jesus, I assume that's your name. I would highly recommend, bro, that you read the Rader Report if you are not a member, because you would actually be surprised at your own statement that is not how I traded last week. In fact, we'll talk about. Wait, okay, sorry. Okay, so. Wait, the Rader Report's down? Say your line. Okay, wait, hold on. I bought a server. From... I actually have a physical server for this. It's kind of funny. It's at my friend's house, so I texted him. So that's that. But that is the momentum zone. So that's what you can draw with QQQ. And this would be our chart for the remainder of the week. No. Wait, where did my QQQ chart go? Okay, that scared me. I was like, wait, no way. But that's that. Okay, so that's that. Anyway. Yo, that's actually funny. Yeah, sometimes if you guys ever encounter errors with the Rader Report, it's because I actually bought a physical server. It's in the basement of my friend's house. So sometimes we have to reallocate more RAM to it as we upgrade it. So it happens for like 20 minutes, but we always fix it. But that's that. Ritter, what was today's EO day squeeze? Price action caused by JPM caller options trade, or is it just mechanics side? We'll talk about that next. But what I want to do right now is who is down to participate? Who's at their computer right now? Type yes if you're at your computer right now, or down to participate. Because what I'm actually going to do is have you guys chart based off of this. I'm going to have you guys chart XLY. And then you guys can tweet at me and I'll review your charts here on stream. Okay? So here's what I want you to do. I want you to follow this. Find expected range. Find market maker hedge range. Draw levels. Put/call walls. Here, we'll have you guys do IWM. Okay? Draw levels. And last one, golden zone. Okay? So right now, anyone who wants to participate, what I'm going to have you do, even if you guys are watching after the fact, like on YouTube, what I want you guys to do is I want you guys to go and chart IWM right now based off of these principles that I showed you. Okay? I will chart IWM and we'll compare. And I'll be able to look at your guys' stuff live on Twitter. Okay? I'll look at it on X. So I'll give you guys a few minutes while you do that. But this right here, screenshot this. This is your steps that you're going to do. But this is, again, for IWM. If you guys are at your computer, definitely do this. Please, please, please do it on TradingView. Just so you come to the dark side. But that's that. How do you find expected ranges again? So there's a variety of different ways. You can do Thinkorswim. It's the number to the right of the options expiration date. You can also look up options, AI, expected range, IWM. And this is it right here. Okay, so you would go, and I want you guys to chart it for this week into the 4th. Okay. October 4th expiration. Okay. What's up, Wolf? How are you, man? Oh, no. No, no. No, no. Oh. No, no. Oh, no. Guys, why is it we always get NPCs that come into the stream with personal vendettas? Personal vendettas against me. We use walls to evaluate whether it's likely to pass that point or not? Yes, but that's a whole nother night, man. I'm not going to lie. Project Save the World. If you want to know more, join the Rader Report, because I just did like a whole mega video on all that stuff. I gave you the models. I gave you everything in depth there. Even last stream, if you go to the last stream, I gave some insights to that. But again, I don't want to hustle you. It's just, dude, like this video is an hour. The other one's like, the other stream's 2.5 hours. It's just a lot of talking, and it would answer way more questions than I could tonight. I don't even think you specifically said SPY was going to crash. Did you? No, it's guys, just to show you, okay? Guys, who do you think? Okay. All right. I'm not even going to. Okay, screw it. Should I say it, guys? What do you guys think? Guys, if you guys bring the demons out of me, I will say it. It's not going to be inappropriate or anything. But who do you think is in this guy's saved YouTube playlist? Who do you guys think is an inspirational trader to this guy? Who do you guys think? Start dropping names, because I'm not going to say names. I'm just going to show you, okay? I'm not starting drama, but let's see you guys do it. Also, keep charting IWM while you listen to me yap. Still in school? No worries, man. Wolf, you missed the guy with a personal vendetta, but oh no. Oh no. Oh no. Oh no. Dar. Okay, that's all I had to say. I didn't say anything, but if you know, you know. If you know, you know. If you don't know, you don't know. sometimes I'm not gonna lie to you guys. A lot of my media journey. Okay, and again, you guys have 5 more minutes to submit the IWM charts. 5-minute counter. All you have to do to submit them is go on X and tweet at me. Okay, but you guys have 5 more minutes to chart the IWM, and then we're gonna do it. But I want to say honestly to you guys, a lot. I used to when I was younger. My mentors really encouraged me to do media. They were like, listen, man, if you're going to learn this perspective, and they showed me all the kind of, I hadn't quite understood it at that point when I was really young with them, but they really showed me how kind of, fraudulent, you get it. There's a lot of snake oil salesmen. And even the places you think are trustworthy, you guys would be surprised how deep the corruption runs in the trading industry. Screw insider trading, screw all this. The real scam is that people sell the idea of trading more than they actually sell the information about it. And it's sad because the information about it is so rare, so hard to come by. And I got blessed with that. I really do think I did. But when I was younger and I started to do this media stuff, I started to get frustrated that why am I putting these videos out here? Why are my videos getting only 800 views? Why, I was so confused. And then I was like, you know what? As I got older, I was like, this is just how it's going to be, Will my views increase over time? Probably, right? But am I ever going to be the big guy in trading? No. And I think there's severe consequences to being the big guy in media. There is severe consequences, not political, just straight up. You almost have to trade a part of your soul to be big on social media. You almost have to be a criminal. You have to be a spaz. You have to be, you have to be something extremely out there. You can't be an average nice guy on media. You can't be a nice guy. You can't be, people like drama, people like tweeting and arguing. And people don't like intelligent conversations anymore. It's kind of sad. But, I'm fine. It's whatever. Media is nothing to me. I love sharing my opinion with you guys. And I love coming on here for good discussion because as much as, I'd like to say media doesn't matter, it absolutely does. It helps me connect with people. It frees up some of my free time, like, charting. I thought, what? Why not throw in a stream? Why not talk with other people, connect with you guys? So, hey, Project Save the World, man. Save up your money, bro. Nursing school's expensive. Don't worry about a thing, man. Just keep pushing. Trading is a leverage of wealth. It is not an income, and you're really going to get the most benefit from trading if you focus on your income in your career with nursing. You're going to be FX Summit in Dubai? No. I'm not going to any of those. Those FX Summits are just a bunch of salesmen going. There's that's all I'm going to say about it. There's not much you'll learn. A lot of people think by going to in-person events you'll learn more. It's actually way more time efficient, cost efficient to learn just virtually. FX Summit is like, hey guys, look who I am. Come buy my course. That's all FX Summit is. If anyone saw any of this material here, I was going to do an event in Miami in last April. The event ended up getting canceled because of the hotel venue got double booked, but for that weekend. But dude, I don't know. Sometimes I have very high moral standards. So the people I surround myself with are you can't be a heavy drinker. Of course, do I know people that drink? It's not like I'm going to cancel you and walk away from you if you drink. But I don't want to generally be surrounded by partiers. I don't want to be surrounded by people who just objectively try to chase money and that's it. I like to be surrounded by religious people because they often have the best life advice. They often have great wisdom, and also compassion. They can connect better. So that's kind of my circle. A lot of that is family, and honestly, I don't have a lot of friends. Like, if you ask me, oh, Rader, if you got married to Stunt Queen tomorrow, who would be your bridesman or whatever, maid, men? I don't know. I honestly, other than my family, wouldn't have a clue, right? I don't have that deep connection with many people yet. I do people older my age, but it'd be kind of weird to have them as my like men, whatever for the wedding. But I actually gravitate towards an older audience as my friends. Like, majority of you guys are actually older. There are some, of course, Brain Rot, Diddy Party, Ohio Sigmas in here or whatever, but majority of the people that follow me, the people that look into my content, they're all older. Like, I'd say my average age on YouTube even is 30 plus, like 25 to 30 plus. It's pretty old, which is good. And that's where a lot of my actual friendships are, in people older than me, because I've always, I have an older brother, and I was always, when I was younger, I felt more, I fit in better with people older than me, because I always kind of acted like kind of older than my age. I was like, I don't like associating with people my age, because I saw the partying, I saw the drinking, I saw the useless behavior. So that's that. All right, everyone, if you have charted IWM, please submit it to me on X. We are going to look at it right now. Oh, let's see who's charting at me. Let's see who dropped charts. Okay, so we had one person chart. You can... Only one person submitted their chart? All right, what do you guys think? Should we grill this guy's chart? What do you guys think? Should we grill this guy's chart? Do you guys think we should cancel this guy? I'm at a Costco eating glizzy. You sure that's Costco? What's up, Abstract? 30 plus here? Yeah, see, you guys are all older. But see, that's exactly what I'm telling you, is like, my information, my content, what I was taught, it was taught to me by older people, like mid-30s, late 40s. So I just generally, that's generally where most of my audience is actually from, like, California. Like, that's just, it's weird, but it's like, that's also where I spent most of my time trading. So when I was developing and training with them. So it's kind of funny. But okay, so here we go. We have a chart here. We have a chart here. So this guy attempted market maker hedge range. Now, what he failed to chart, where is your expected range? Okay, this is your expected range. But don't type expected range. Okay? You have to type just expected range, because the market maker hedge range you forgot. You forgot the hedge range. You have the expected range, but where is the expected range, or excuse me, the market maker hedge range? So you do not have the hedge range, but you do have the expected range. So that's points. Okay? That's points. Now, he draws the golden zone here. I really don't think this is it, and I'll tell you why. It doesn't make sense. A lot of retail traders, they like to draw their liquidity zones through previous price action. For example, I could draw a trend line here. I could draw a trend line here. But we want to try to use the most recent structures that maybe haven't been tagged yet. Or maybe they have been tagged, but they're still in play. Okay? Now, what I will show you is this. Look how intelligent these put walls are and everything else. This put wall right here is on that candle right before the gap up. That's incredibly intelligent, right? The options market knows that this right here is a level. Okay? So that's that. Now, check out this as well. The expected range is coincidentally, not so coincidentally right here before the gap. So if you guys have another chart that you are currently working on, feel free to tweet at me. I'm going to be checking on my Twitter while you guys are doing that. So feel free to do it then. But We're going to go chart it right now, actually. So be prepared. But I will say this, Mr. Futures Market, great job. Listen, I can't be proud of you enough. You're the only one in this chat room who submitted it so far. So pat yourself on the back. That's great. Whether you're wrong, don't check my post. Bro sent a golden ticket, Willy Wonka Diddy party invitation to me. Okay, I'm kidding. I signed up for MM. Well, if you have Thinkorswim Wolf, you can also get it on there. But okay, do you guys also see how the golden range is right here? You're almost guaranteed to move off of it. This is very important. Okay, I digress. Okay, wait, Kuwani seems to have submitted a chart. Okay, guys, this is going to make you laugh. So Kuwani submitted a chart. Jesus. What is this chart? What the hell is this? Guys, this has to be the most average Rader chart. What in the hell is this? How did you get this image? Where the hell did you get the... Kuwani, where did you get this? Is it... What? Where did you get this image? Guys, this has to be fake. This is not me. This can't be me. This literally is me. But how did you get this image? Why is my head shaped like a banana? Okay, I guess we're going for IWM here. So, why is my face actually faced like a... Why is it shaped like a banana? What is that? Why is it shaped like a banana? Okay. So, he says the market maker hedge range is up here. Okay. He has the expected expected move. Cool. He has a big green box. Now, Kuwani, since when is a resistance zone green? Also, where did you get this? Is this from this channel here? It's a valid. Hey, listen. This is a good effort. This is a good effort. Yeah, your golden zone is off, but we'll talk about it. This is a good effort. Okay? And again, this is humorous. I like the humor. Thank you, Kuwani. That was funny. But the chart itself, good effort. Look, the expected move, as long as you guys can draw this, get in the habit of drawing those because that's extremely helpful. You like the color green. What happens when price goes above it? You forget to change it, and then you think it's a support now. Damn, I wish I was at my computer. You're good, man. We'll do more stuff like this in the future. All right, let's go chart IWM. So, IWM, let's go look at the expected range here. Kuwani, Rader leaked? I didn't think I'd be seeing a Rader leaked tonight. So 5.395 plus, what is this? 220.95. So we get 226.35. 226. It's like literally the same. Okay. $226, and again we always draw our zone at the expected range, and then we can just go here, change the minus. Now you guys can do this in Excel for peak efficiency. 215.55. 215.55. Okay. That's it. And then this is going to be a support zone. And again, very intelligent. Once again, you guys can see they place the zone right here. The expected range is very intelligent. They know what they're doing. Okay. So when we go up here, we just kind of make sure, since IWM is not at all-time high, it makes sense. Okay. So now we can go draw support. I also do see a support level right here. Why is this a support level? You had a sell off, and then a gap up, and then you never touch that gap up again. So this is clearly some sort of liquidity level. Now what's interesting is I think this level was a put wall as well. So let's go look at this. So IWM, we go to 1018. And again, always, when you guys draw these put walls and call walls, use the 1018 expiration. Use the next monthly. Do not use weekly. Use monthly. So with that being said, within the expected range, we have quite a big put wall here, but there is more calls on it. Whenever you guys see a split level like this, just understand that it's a liquidity zone. It's a large liquidity zone. You don't necessarily have to label it a call or put wall. Just understand that when it's split like this, it's a large liquidity zone. Okay, so as far as within expectations to the upside, we have 226, 226. This 225 wall is quite big. So it's the second largest of the week, second largest level of the week or the month. So 225 is nothing to scoff at. So we're going to do 225 call wall. 225. Okay. Now it's time to go draw the golden zone. Now, and again, this is why it's hard for me to teach this stuff. But when I go to draw the golden zone, I'm thinking in my head, I'm going, okay, what makes more sense with the current market condition? We're in a pretty bullish market. I mean, IWM, especially being small caps, it matches the theme of 50 basis point cut from the Fed or 50 point cut from the Fed, helping out the small caps, et cetera, et cetera. So obviously I want to keep the golden zone on the side of the momentum, which is currently up. So with that being said, I'm going to zoom around and I'm going to try to find, okay, so Kawani had some sort of channel here, okay? So he drew a channel, and this isn't wrong. By any means, this isn't really wrong. But he drew his channel the wrong way. He drew it the other way. So what you can do is this right here. So you turn on the midline. This middle line is called the third deviation. And you can see whenever you guys get a chance, try to always draw your zones diagonally. Diagonal zones are always going to be more valid. When you can, you're not always going to be able to, but when you can, always draw a golden zone. Or draw your zones diagonally if you can. If there's a very clear channel or something. Now, I'm going to make this the golden zone. Why? Check this out. Okay? You have a market. Now, you'll see, and I'll draw a horizontal one so this all makes sense. But you have a market, and the market tells stories all the time. You had a huge pump, sell-off, pump towards the high, you never broke it, and you started to creep back. The sell-off was never, by no means was it super violent. It was pretty controlled the entire time. So it's building pretty thick structure. When you look at this story, you can see, okay, well, where is that point that's probably going to move? Well, you had right here a gap down. So this is actually where a huge liquidity level is. They all start to short here or here, either one. And we know this because they defended it before it got touched, before it got touched. Picture it like this, guys. This is called castle principle, okay? If you ever want to find that big liquidity zone in the market, it's going to be the level that has not been touched but was defending before, right? Kind of like, I was going to say Diddy parties, but that's just inappropriate. That's immature. You want to defend the castle before. You want to defend yourself before the invaders come to touch you. Come to raid your castle. That's outrageous. Immaturity bleeds through me, even at this age. So right here, you have a zone. There, and this is why you guys have downtrends. Like, wake up, people. Do you guys understand why we have uptrends? Because eventually there was a liquidity level formed, and they defended it, and then they built a new one, and then they defended it before it touched, and then they built a new one. The day that comes back and touches them, oftentimes you see a lot more dynamic change. The problem with pattern traders especially is they try to teach you, oh, short at the neckline. You idiot. That's not what you're supposed to do, right? Like in a downtrend. Oh, short, higher lows, lower highs, short on the low break or something like that, right? Or, oh, wait till it comes up for a double top. Why are you shorting that? If it was actually going to reject, it would reject before it actually went down or before it reached that level. The easiest rejections happen before it touches the major liquidity level because they're defending that position. So this is liquidity. This is what we call castle principle, in that we know this is the level that will cause a huge reaction because it's been defended so many times. Now, you're probably looking at this like Rader. Okay, so why isn't this the golden zone? Because you want to be in before this move. And when you look at this chart, if you come back up to this area, it's more than likely right here, which is where we're currently trapped from. It's more than likely to go here. And if it goes here, it's then going to rocket. So we want to be early to this trade, and it makes sense. Okay, let's just keep it diagonal. Let's keep it here. That this right here is going to be the golden zone for the week on IWM. And then, okay, if we do expect some sort of bullish breakout, because again, IWM is, following quad witching, that's a very important sector to consider. Then we can draw a momentum zone to where that zone was and say, look, if we do come up into this level, it's likely to squeeze higher. That's where we want to make sure we're in a trade by then. We're not entering in here. We want to be in a trade before then. And that's going to be that. Okay, so hopefully all you guys kind of got some nuggets from that. I don't expect you guys to know everything I just told you, but again, this takes thousands of hours of practice. I mean, I used to chart all day, every day, and I've put in probably 6 hours a day learning under professional mentors since the age of 15. I just turned 15. I was going into high school, and I was lucky enough to have that opportunity. But this right here would be my chart for IWM. Now, you could go, okay, Rader, so what about the management part of things, right? How would I think about this call wall here? What would I think about this? Well, think about it like this. If you get some sort of massive move and then you start to slow down, just expect into the end of the week or into the end of the month, since it's a monthly call wall, that you can expect some selling pressure, right? Back under it, back into it. Call walls act as magnets. And so when you go above it, expect some sort of drawdown back into it. Whether it keeps going higher or not is irrelevant. But expect some sort of slowdown, some sort of pressure here to be felt. Okay? But again, the momentum zone is the dominant trade. This is it. So comparing this to Kuwani's chart, he, I think, drew the wrong parallel. The problem with your parallel, Mr. Kuwani, is that your parallel disregards the fact that we're coming from a recent high. Therefore, this is kind of the general direction of the market, whereas what you have right here is kind of counter to that, which isn't bad. It's fine. But you want to generally stay with the consensus that, okay, if we're flagging now or we're forming some sort of consolidation before a big rip, then you want to be consistent with that and say, okay, downwards parallel, but also the most recent price action, right? You want to stay with that if you can. Okay? So that's that. Now, what's interesting as well is, anyway, that's it. So does everyone understand this? Hopefully by now you guys are kind of getting it. I hope. Drop in chat if you guys have any questions. Yes or no? Do you guys actually understand this stuff a little better now? Do you understand it a little better? Yes, yes, yes. Okay, so this is different, and I'll kind of just show you guys the Rader Report a little bit from last week. Okay. So our server, I just messaged my dude. He's gonna fix it. But the small business owner opportunities or issues is, like I said, I literally bought a physical server. So when that runs out of memory, it's kind of GG for the website until that gets fixed. But I'll just show you the current weekly. So as far as this right here, what you guys can see is that, where is it? So a lot of the trades I have, they're very similar. They're very simple. For example, this forward. There's different ways to navigate trades, guys, and there's different ways to think about it. For example, the idea about forward into the end of this week was that the markets weren't actually pricing in. They weren't really pricing in a new high. They weren't for the 10-4 or even the 10-11 expiration. So it caught my interest that, okay, so you have this trade come in. Can we see it on discount and then see it rip up through the rest of the week? GG means good game. It's like we're cooked or we're finished, we're done. But as far as this right here, they weren't expecting to move. And so I was like, you know what? Okay, so if we do gap above this or gap into it, it's definitely worth taking risk to then catch a high break here. Okay, so why is that the golden zone right here? Because, well, that is something that you can expect a reaction from. It's where you sold off the hardest and you started to close into the low. And that's exactly where this order came in at 1080, right below it. But anyway, so forward, how did that work out? Well, it is below this level, so there's no opportunity right now. But if we do see some sort of extension, some sort of move tomorrow back into this green zone, it's definitely going to raise an eyebrow for me. And it's definitely going to be something I might take a stab at for 10-11. Okay. So anyway, do you guys have any questions? Any questions over the charting so far? So again, this was just reviewing indice charting. This is not necessarily individual stocks. There are some differences between the two. You don't have to do expected ranges necessarily on every stock you chart. You don't. There even also, guys, remember this. There's not market maker expected hedge ranges on every stock. You can't do that on everything, and you shouldn't. You shouldn't need to do that on every. It's just the indices you want to be very exact with, very accurate with. Okay. Lots of gaps on forward, just like their body panels. Hey, man, don't insult my Mustang. What did you eat, gang? I see that plate there. I'm obese. Guys, by the way, I'll show you guys a selfie, the abstract. This was actually a selfie, guys. My mod in chat, his name's Abstract. This is actually an image of him. Okay. Okay, you know what? I'm not even gonna post it, just because I don't want to hurt anyone's feelings or get canceled. I'm a politician, man. I can't do this. I'm a politician. Okay, let me go back to stream here. Do you guys have any questions? Any questions so far regarding this stuff? Now, again, if you guys want to get more practice with this, you guys can always tweet at me, man. Just always feel free to tweet at me. There's nothing wrong with tweeting at me. I'm always open to reading your guys' charts, giving you feedback, things like that. So if you ever want to, again, my Twitter is just at RaderTrader101. Let me actually show you. This is my Twitter right here. Okay. So you guys can go follow my Twitter. And you can always tweet at me, stuff like that. Okay. I always drop some videos on here that I also post on YouTube, things like that. So you guys can get good information with that. Okay. Now, you can always tweet at me here. Feel free to do whatever, but that's something you guys can do in your free time. Okay. I check pretty. Oh wait, you guys sent me. iCapital, why did you send me a photo of you eating a humongous slice of pizza? What is this, dude? Humongous slice of pizza? Ooh, relish. Ooh. Okay, the pizza looks good, though. And then my Discord mod sends me this. Oh, okay. So I'm getting banned. I'm getting banned. But regardless, you guys can do that. Also, if you guys question, what do you think about the Chinese market now that everything is pumping up like Neo? Go back. You're like 50% late to the party. Don't trade Chinese stocks. Not worth it anymore, man. The trade was later. The biggest mistake is retail gets involved in stocks right after they already move. There's no trade idea in them anymore. Zero, zilch. Shorting or long, don't do it. But this right here. If you guys do actually want to ILU strike, is it happening? What do you mean, for FedEx or what? I'm confused what you're saying. If you guys do want to support, of course, this stuff, but also have an absolute banger of a platform. Now, this right here, I always advertise this, but I got to let you guys know. You guys already know the Rader Report. I'm actually going to be updating this. This was, I'll show you this now, but this was kind of my entire life story is being able to beat markets with edge and truly interpret them. My mentors were extremely gifted in the sense that they understood the mechanics of the market, how they actually worked, and that really bled off onto me because the way they taught me it wasn't necessarily, it was a perspective. It was a way to beat the markets in any condition, find a trade opportunity in any condition they throw at you. This is the Rader Report. Just recently, we make all of our data is in-house, made by me, from the seasonal, daily calendar and things like that to even I give a very specific outline, a scary specific outline to what you guys can expect into September, et cetera, et cetera. Of course, first week, we expected a classic sell-off. I mean, how could you not? And here was the tickers we got involved with, things like that. But this is what we do, and this is what I do. This is my life's work, is going into the weekly report. This week I'm even mentioning buying the month, or not buying. I'm releasing the monthly report. These are the longer dated trades. But of course, every Sunday I release a report going over my thesis for the week, upcoming week. It's important to know that I don't just post trades after the fact. These are trades published beforehand in professional manner. I am so damn confident in the way that I trade. I'm legitimately willing to post a lot of my trades. Of course, there's other trades that pop up during the week, but majority of my trades are on this, and I post them a week in advance because opportunity is opportunity. It's there or it's not, and that's how confident I am. But I think you guys would really enjoy this perspective, understanding kind of the dialogue, understanding how, things like CVX come to play and how I determined, you'll see a glimpse into my brain. You'll be able to see how I work through these problems, how I work through the markets, because that's all it is, right? If we solve a problem, we get paid. But if you do want to sign up for a free account, it's absolutely free. You can get my SPY chart. But if you do get the pro membership, you also get all my other charts as well, which I'm going to update tonight. Now, before I go to bed, you also get the tools as well. So you get the seasonal tool, everything else. You guys all know that. You guys half of you are Rader reporters anyways, so I don't even need to say anything. But I think we actually did just cross like over 200 Rader reporters, which is huge. Thank you so much. And virtually all, I wanted to just be transparent with you guys. Nearly 100% of the revenue that I get from the Rader report, so far, I've dumped it back into APIs and everything like that. So you guys are quite literally self-funding your own platform, which is kind of funny. So anyway, I'm going to keep making that. If I want to make you guys excited, I use a tool called Koifen a lot, and you guys may know of this, but one of the tools that we're actually developing right now, which I'm almost done with, is this right here. So this right here is going to be a tool where you can scan, and this is for seeing leaders and laggers, but also it's going to have the ETF holdings. So you're going to be able to see, okay, well, Rader says, it's likely that we play the continuation in the leaders. You scan the chart and you see that, for example, discretionaries are leading the market right now. Sectors and industries alike. These are sectors. You can also do industries, or any ticker at that. But you can just quickly look into XLY. I'll have a tab there, and you'll be able to look at the top holdings of it, etc. So you know exactly where to go. The whole point of this is to keep your scanning efficient. So this is a tool we're building as well, but to also make it like that. But yeah, super, super cool. But again, this is all self-funded by you guys. So all these projects, all these APIs are quite expensive. In fact, I pay close to around $6K a month and just API data and things like that for the Rader Report. So it's quite expensive, but it is all self-funded, like I said. So it's just a passion project. I love working on this stuff, especially making these tools. My buddy who helps me code this, it's just fun. It's fun to make all these tools, because before I was relying on all these other platforms and they didn't do it quite the way I wanted to. But now that we have a platform of our own, it's very easy to then go and make a tool that I'm actually satisfied with, that I actually believe has edge. So this is what we're doing here. Super, super cool. Now, the next thing many of you guys are also in is also the Discord. So a lot of you guys don't know, I don't advertise this as much, but we do have a private group. It's not just me. Don't think you're going to be listening to a 20-year-old. There is a lot of professionals in here. My old mentors, Zach and Wes, are in here. There used to be Chris and these other guys that trained me, but they're no longer in there. They got better things to do. But enjoy this while you have the time. If you are serious about joining this, like really serious, I would recommend DMing me on Instagram. It's $100 a month with a 50% off code. $100 a month. If that's too much for you, don't DM me. That's fine. I don't care. But I don't want you to DM me and I send you a price and you go, oh, it's too expensive. Okay, just if you're interested in that, it's $100 a month. This is heavily academic. There's study groups. There's live calls, lessons at night with Zach and I. Zach's my mentor, lifelong mentor. And you think I'm smart, wait till you listen to him. But also there's recorded lessons, things like that. So while I don't advertise it all that much, you guys can certainly participate that in. Just recently, I just dropped a group assignment. This is where you can participate with a bunch of other people, socialize, maybe make a few friends. But I give very in-depth I give basically really in-depth assignments, and I ask you guys to collaborate and things like that. And then at the end of the week, we go over it and I give kind of an answer key to it. So that's what we're doing. You thought it was $50 a month? No, it's not. It's 100. But that's it, bro. That's it. Okay, wait, let me catch up on comments real quick. So that's the daily plug, just to get you guys in the loop. And again, I want you guys to be involved. I don't want you guys to just be on the sidelines. Again, everything costs money, but the reason it does is if I made this all free, you guys would be surprised. I would have 0 followers, because when something's free, it's not a responsibility. We as humans, if we don't have bills to pay, we don't get up to work. That's just how it is. If we don't have responsibilities, we don't get up. You need responsibilities. We found our Discord used to be free for like 12 months. And before even the Rader Report and all that stuff, no one was in our Discord. It was actually hard. Like, it was free. And I had the biggest media following, yet we couldn't get anyone to join. So that's that. So anyway, it keeps you guys on track. It'll keep you guys hustling, I promise. The Zach Bootcamps video, or so much video, takes me forever to watch and take notes. That's good, man. And agree, I've been to all the summits and it's so boring. It's basically better to watch on YouTube, but it's a tax write-off for anyone involved. Oh, that's funny. Miss Lloyd, that's interesting. Yeah, I've been invited to one of them, but I declined because I was, I don't know. I'm kind of stubborn with all that stuff. I doubt I'm going to get an invitation this year. But don't even apologize for the Rader Report subscription, worth many multiples of what you charge. Oh, I appreciate it. Why API date are so expensive? Where do you buy those? APIs are just incredibly expensive. Exchange agreements, Oprah, licensing, all that crap. Proud of my Rader Reporter. Thank you. Damn, you're making $10K a month off the subs. Congrats. No, I'm not making $10K a month off the subs. Who's IB, bro? He's mad geeked in the Discord. He's wild. That's Wes, but it's also me. So we both shared the login to that account. I posted a lot of the data on the IB account, but he likes to yap during the day about day trades and stuff. I unsubscribed from 2 services so far and get the same information from the Rader Report. Hell yeah. IB never sleeps. Yeah, he's up. He's literally, yeah, he's never asleep, bro. When I was out there, I couldn't keep up, but it was crazy. Bro, $100 is too cheap, but I get why you did. That is more a passion than a profit thing. W Raider. That's awesome. Question in the crypto market. We have options too, futures. Do you have report futures, commodities, and cryptos? So my reports do go over broad markets. So I do mention a lot of the crypto futures I try to stay away from. But again, if you're trading futures, it's the same shit as the equities. So that's that. Dude, JRE, bro. Holy shit, man. $50 dono from JRE. He says, appreciate your knowledge and wisdom. Keep banking. Damn, bro. What a G. It's $100 a month. You have 200 Rader subs. Oh, no. I have 200 Rader reporters. It's $50 a month and $25 a month. But again, like I said, like literally majority of that goes to data and development. it's just a passion project. Hey, I appreciate it, JRE. Thank you, bro. Your support, your generosity. You don't have to give $50, and I appreciate it, bro. That means a lot to me. More than anything, what touches my heart about this media stuff and why I connect on here is tonight I was actually wondering, should I even hop on? Should I hop on the YouTube? I could just do this by myself. But I was like, it's fun. It makes this fun. It's connection. And sometimes in life, I live by myself. In fact, I live 537 miles away from my girlfriend, my lifelong partner that I plan to spend the rest of my life with. And it gets very lonely. A lot of the times it gets very hard, and so having people like you, knowing you guys have my back through whether not financially, but just morally, having people stand behind me. I'd rather climb to the top of this mountain, not by myself. People, Lambo's there's a reason why Lambo's only got 2 seats. But, fuck it, let's get a bunch of Lambos and let's cruise down Main Street, screw the whole 2-seater Lambo shit. But I thank you so much, man. It means a ton to me, and I really do appreciate it. You guys, especially seeing your guys' support, seeing your growth, even guys charting like this. When you guys send the charts like this and this amount of effort, the fact that through a computer screen I'm able to connect with someone else in the world and somewhat shape their view of the markets, it means a lot to me. And that's ultimately what my mentors taught me through. Hey, man, they taught me, do this, do it in the footsteps of God, be good with it, be humble with it. Don't show yourself if you're not that, and be real with it. But yeah, man, JRE, you're a boss, bro. I appreciate it. Hope you're doing well and sticking around. But yeah, man, appreciate you and your support, man. That's my boy, all the way 500 miles away. Yeah. But other than that, I'm closer to you than your girlfriend. So, Buddha, what are we trying to apply there? What are we trying to apply? Okay, let's not go there. Okay. But with that being said, guys, Mr. JRE is ending it on a fire note. So what we're going to do is our nightly 10 push-ups, okay? Nashville, sick, dude. Don't comment about my short shorts. What I want you guys to do is do 10 push-ups. We're going to do our nightly 10 push-ups. If you cannot convince yourself to do 10 push-ups right now, you will not be able to beat a $70 trillion market, okay? Trading takes discipline. If you're in your cozy little bed, or if you're like JRE and you're sitting on a big pile of money right now, get off that big pile of money and get down and do 10 push-ups, okay? Ladies, you have to do 10 push-ups with your knees on the ground, okay? If you cannot do a full push-up, do one with your knees on the ground, okay? Those are called girl push-ups, but I still want you to do them, okay? All right, here we go. You ready? 10 push-ups. Going over here. Oh, 10 push-ups. Here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's go, dude. All right, everyone. I'm like sore as hell, bro. I ran so much today. I'm doing squats. Okay, guys. Thank you so much for showing up to the stream tonight. Mr. JRE, you're an absolute legend, bro. Hope you're doing well. And keep making the fat stacks, bro. But as far as all the other people, thank you so much for showing up today. Hopefully you guys learned something. Watch it back. Review the information. If you guys want to review this other stuff, Go through the market mechanics. First 2 videos. Those are going to go over the topics I talked about tonight more in depth. Number 1 is about how to spot liquidity zones. Number 2 is more of what I told you tonight in detail. Okay, so if you want homework, review those 2 videos right after. And again, those can be found on the market mechanics playlist in my YouTube section. Super, super huge. So these 2 videos right here. Okay. Other than that, have a wonderful rest of your night, guys. I'm going to get out of here. I'm tired. I need to get to bed early tonight. But other than that, bye-bye, guys.